All right, guys. Good morning. Good morning. I hope, guys, you're good. It's just a quick analysis session this morning. Just trying to check it out in terms of the currency pairs. The reason why we're doing it is because we are already in a London session at this particular time. So I think if we check it out, just a quick London session and see how the market is performing, and just trying to identify some couple of opportunities that we can be able, to jump in from now to actually what you call 3:30, 4:30 for New York session. It's a long time, so you can be able to collect to some of the trades and make something out of it. So yeah, as I said, it's just a quick session. I'm not gonna waste time. I'm gonna have to jump in immediately. The first one I think that I want to look at, it's a GBPUSD. And if you look at it, I'm looking at a GBPUSD at the moment. Just this one. Okay. I'm looking at a GBPUSD at the moment, right? And the most important, because of we are day traders, right? We're trading in a daily basis. So whether we are doing the scalping, whether we are doing a long trade in a day, but I think the most important thing is the time frame. Okay, let me try to mute all. All right. So the most important is to check it out the time frame, right? So these are the time frame. And again, the time frame identifies the period that the data has been actually, collected at that particular time. So if we go, because of we are day traders, we can go on a daily time frame, but mostly because of the money that we deposit, a lot of people, they deposit from $100 to $150. So on a daily time frame, we're actually going to give you a little bit of longer, inversion of the time. So I always go back and trying to reduce it maybe to 4-hour time frame, so that maybe we can start it for 4-hour time frame and try to execute around on a 15 minutes time frame or 30 minutes time frame. So basically what I personally do when I get to 4-hour time frame, so first of all is to identify where the market it was, where the market has been, right? Once I identify where the market it was in terms of the highest position, then I will draw the line to identify that level. So I can see the market goes all the way back to here, but it fails to proceed, it reverses. But where it touches so many times, this position touches, comes again, touches here, and this position, it fails to actually go to touches at this position. So that is why I'm identifying this line, telling myself that this is my highest line, this is my ceiling. And then the second thing is to identify the flow. This is the flow of my position. And again, during this high and flow, I can see that the market has been moving around, playing around at the same position, but failing to break at this level from the 12th of the December all the way to 5th of December. So, right. Just hold on. All right. So as I say, that this is another position where you need to identify. As a trader, I'll identify this level, respecting it because of the market has been coming this side, trying to break, but didn't break all the way to the position of 1.25054. Again, goes up, trying to break up, comes down, trying to break down, all the way trying to go up, failing to reach 1.27, 27936, and then it started to pull all the way down. So these are most important position when you are actually, checking your market. So if we go to a lower time frame, like 1 hour, we want to see now what did we identify. Now, there's also a couple of things that I'm seeing here. If you see that on Friday, the market gapped from this position all the way to this position and start going all the way up, right? In a sense of a gap, if you understand what the gaps means, once the market has gap, the rules of the gap is that the market has to come back and recover the position where it has been actually gapped. So we want to really identify where exactly it gapped, and as well, did the market recover at that position? So if you look at it at this particular time, the market is actually at the recovering at that position of the gap, right? So what it means is that once it breaks here, this position, there's no returning. The market will come and retest at 1.26241. So this is where I actually, identify that once the market jump this level, and then actually means okay. So here I'm trying to put a label on it. So it actually means it is a sell position, right? So you can prepare your trade, try to wait until the market passes this line, and then you can jump in as a sell. And you put here as your check profits, and then you see, just watch the market and see where the market is going to actually, go. But definitely at this trade, the way I'm looking at it, the market, it actually just wait to respect this position. Once it break above this line, the confirmation has made that it's continuing going all the way down as a sell. So that's another sell opportunity there to those people that are actually trying to trade this morning, on a London session. That's the sell opportunity that you can be able, to take advantage with. So yeah, that's the first one, GBPUSD. That's a GBPUSD. I think the second one, maybe we should check it out in terms of EURUSD. Let's see how EURUSD it's actually, performing at this particular time. So got the EURUSD, open the chart. So what I normally do when I open the chart like this, I like my chart to be clear so that I can be able to see everything clearly. So I'm gonna remove the grid, When I put my chart on the candlesticks, zoom a little bit. Now I can see properly. And again, as my rules when I'm trading as a day trader, instead of going to 1 hour, because of unless if I'm gonna put $1,000, then I'm gonna go to 1 hour trying to execute the bigger trades. But because of amount of money that a lot of people deposit, I prefer starting from the 4 hour, right? So from the 4 hour, we can analyze these trades in a different technical analysis. Some people, they actually use, the trend lines, trying to identify the position. So let's see if we were trying to identify the position like other traders, how they do, right? So what they're trying to do is to identify the support and the resistance level, right? The support and the resistance level. So after we identify, okay, where is it? After we identify this level, and again, we can go back to our small time frame. Let's say, for example, 1 hour. I'm trying to see our setup. So pretty much, again, you just want to see the trend of the market, where the trend is actually going. shows that the trend here has been the downtrend all the way from 29 December. The market has been going all the way down. If we stretch it a little bit, it shows it's a trend, downtrend. So now this is the first position that the high possible the market can touch. The second possible position, it's this position. The reason why I'm not putting at this position is because of, if you look at it on NFP, the market shoot all the way down and it pull the candlestick all the way up and close it on top. Once the market does that, it actually means the data collection of that instrument, it has been pushed the price to the upper level, right? So there was no data in this, but the data ended on this position. So the reason why I'm putting here is because of, you can see the data has been touched at this position. So this is a very, very most important position as well to actually identify. So I can also tell that when it comes to EURUSD, again, we're gonna, anticipating a sell today. We're gonna anticipating a downtrend, maybe to the level of, let's see, to the level of 1.09010, 1.09010. Just trying to change the color. Yeah, so that it can be at least a different color. So most people, they use this line. Some people, they just identifies the highs and the lows and trying to see where the market has turned previously and actually take advantage and identify the position from there. There's also a different method that you can use. You can use, let's say, for example, the Fibonacci retracement indicators, right? So if you use the Fibonacci retracement indicator to the level where you think the position will go, now it will give you the 50% level of Fibonacci indicator. The 50% levels of Fibonacci indicator means once the market fails to break above 50%, there's no high possible that the market will go up to 61 or to 100. So the market needed to break this level so that this instrument can show us that it's the next possible move, it's a buy, right? But now the market fails to break to the 100 to 50% Fibonacci level, definitely tells us the next possible position, it's actually going all the way down. Now look at the candlestick that is playing at the moment. It pushed the data from 38.2, pushes the price all the way down. So here's where confirmation made. Once it breaks on 23.6, already it shows the sign or the signal of saying that the market will not go up at the moment. It will come and retest at the 0.0 position. So yeah, that's what actually, I was anticipating in terms of the currency pairs. If you look at a Fibonacci retracement, still the same, gives you the identification that the market, it will actually push the price all the way down. So there's a nice opportunity of a sell there that you can enter and just monitor it to 0.0 Fibonacci retracement level, and then you can put your take profit from there. Then yeah, start collecting cash from that position. So the last one, because it's a quick analysis, fast. The video, obviously it's recorded. I'll be able to send the video if you guys want it, or anyone who wants it. All right. So the other one that I was looking in the morning because of London session, it's GER30. Again, it's an instrument from Europe, and this instrument also actually moves when actually the market open in terms of the euro. So we go on a 4 hour, as I said, depending on amount of money that a lot of people deposit, and then identifies the highs of that 4 hour. So you can see from NFP. Okay, this is the NFP candlestick here. It pushes the price all the way up. But again, it fails to break on a level of 16,652. So the highest high of GER30, it's actually on 16,851, but the market hasn't been break 16,652 in actually a week from the 2nd of Jan up to date. It hasn't break to that level. In natural fact, we can see rejection from this position, the market trying to, pushes all the way down. So the second thing I have to identify where the market touches the floor. Okay, I'm going to put this position on 16,484, and then I'm going to identify the last position on 16,404, right? The reason why I'm identifying here is where the market has been respected. It was trying to break, pushes the price down, trying to break at this position, it fails, goes all the way up, and again, playing around on 16,616. What actually I'm seeing here, I'm actually seeing another sell in the morning. So 2 things that you can be able to do here. First thing is to wait maybe the market to break at 16,567, confirming your sell, then sell, put at 16,466 as a take profit, right? Or if you're brave enough, considering these 2 sort of like a double top, considering this touch, even this touch, you can enter a sell immediately and be brave. Once the market get to 16,567, then you can now lock your profit. So you put around this position as your stop loss. Once the market breaks, comes here, put it as a stop loss, then you watch the market. You put this side as a take profit, watch the market comes all the way down. If it rejects at this position and the market trying to push the price up again, it means you're not gonna, your trade is not gonna close on a loss. Your trade at least is gonna break even because of you put a stop loss where you actually open the position. So it gives you a chance to say that, okay, I didn't lose anything. Let me try to, to jump in again. So here's another instrument, the GER30. I'm actually anticipating a sell from where it is now all the way to 16,464. All right, so that's it, guys. Thank you very much for tuning in. The video, I'll be able to send it to you guys. Thanks.